corporate balance sheets still look pretty healthy to me, man. This is why I'm not panicked at all about the markets until we see some serious decay in overall asset and actually net worth. I'm not worried in the least. So I'm going to start with this. This is what I looked at yesterday. We're going to look at the debt securities. I read an article about a guy who's like, look at all the debt that's accumulated over time. Woo! It's just a silly, man. So we got all this debt you can see right here. It's a non-financial corporate business debt, securities and loans, liability level. You always have to do non-financial because banks and insurance companies are a little bit different in terms of you can't just do a typical review of their asset and their income sheet and their balance sheets because of all the debts that trading hands and all that. All right, so I said, okay, that's, all right, that looks like, oh my goodness. And I went to edit graph, and then we're going to go to log this guy format, and you'll see it's not nearly as right there. It doesn't look nearly as bad when it's logged. And logged just means it's a percentage as opposed to actual dollar amounts. So the percentage change is all that really matters. What is the change in your debt? 1%, 2%, 20%, or $1,000, $2,000, $20,000. Well, it's percentages that matter over time. Anyway, that doesn't seem that big. It just doesn't seem that big of a deal. I mean, it is debt, non-financial corporate business and debt. We got $13 trillion. Yeah, $1 trillion. All right, so then we go over here and we say, well, what's our assets here? Non-financial corporate business total asset level. And we got $54 trillion. All right, so 13 and 54. And again, you can make an argument, I suppose, that the asset level went up with the debt. Either way, the asset is trading at, I don't know, is that 5? Let's see, 54 divided by 13. That's 4 times to 1. Right? I don't want to say return on investment. I don't like that. Or return on asset. I don't like that either in this regard. But anyway, either way, you got basically basically $5 of assets for every $1 of debt. And then we can edit this too to show you the log to make it, so it's all transparent. It's going to be pretty much the same. A little bit, again, it's pretty level. Just continue going up and up and up. No big deal. All right, but then we're going to look at total, that was net worth. We're going to look at net worth. That's all that matters. Net worth, $30 trillion. All right. Look, man, you got $30 trillion. That's assets minus liabilities. Assets minus liabilities. $30 trillion of assets. When in fact, no, Fanny, So that's a lot of assets in which to use to pay off debt, if that makes sense. We're going to show you this right here from Investor Business Daily. 13 firms hoard $1 trillion in cash. And we're just going to show you right here. Apple, I'm not sure, they still got $202 billion in cashes from February. I don't know what their current cash holding is. We talked about Berkshire Hathaway the other day, how about they had taken on some debt. But $202 billion in cash is Apple. Google, $169 billion. We can just scroll down here. Look at all this cash. Microsoft, Amazon, GE, and I did look at Berkshire, United Health. That's weird. Pfizer, Anthem, General Motors, Coke. That's billions of cash as of February. It's nuts, man. So we see I saw Berkshire Hathaway here real quick. And it said, hold on just a second. Let's see. The S&P 500 companies now have $8.13 thousand of cash for every man, woman, and child in the U.S. $8,131 of cash. 13% have $2.7 trillion, which is 40% of the total cash of the S&P 500. Companies paid out $742 billion in buying back their own shares in the last 12 months, ended September 2021. That's up 30% from the paltry $570 billion the previous year. And now investors want their money. Berkshire Hathaway says in his annual letter to shareholders, be holding the costless and powerful way stock buybacks add wealth. And let's just go to Berkshire Hathaway, for instance, and let's just look at their financials. We're going to go to income balance sheet right here, and total assets. In 2008, they had 30, I don't even know what that is, billion in cash. That's got to be a billion, right? That's got to be millions. I'm sure it is. Anyway, 30 billion in cash. Fast forward to 2021, they got 3 times that, and 90 billion in cash. So we go down to total debt right here. Their debt went from 97 billion to 114 billion. But then we go to short-term debt. I think it's right here. Current debt went down from 4.3 billion to 2 billion. Now their long-term debt went up by basically 20 billion, but their cash went up 3 times. You see what I'm saying? In 5 years, and that's at the end of 2021. I mean, when you look at the debt thing, as people get, here's a total cash on hand for U.S. corporations. I mean, look at that cash went up from 120, and that's, I don't even know what that is. 120 million of dollars. So it's not 120 million. I don't know what that is. Is that a billion or I don't know. But anyway, to this right here, went from 120 in millions to 201 in millions. I guess that's 12 trillion to 20 trillion. I don't know. But you can see what I'm saying. You can figure it out. Anyway, look at that. And so then we go back over here, and this is what everyone was griping about. They got too much debt. It's going to sink the market. Again, that's the article I read. I referenced yesterday in a video I did. I mean, it's nuts to me right here. They got $12 trillion of non-financial corporate business debt, securities, and loans. And yet they're sitting on, I mean, how much cash these guys sitting on, did we say? I guess I lost it. Yeah, I lost it. Anyways, so they're right here alone is Berkshire Hathaway with, what do we say, $88 billion of cash. Oh, let's go to Apple. Right? And I think this is not going to be as of September. I think it's be still September 2021. We're going to go to financials. All right, so let's go to total assets. Apple's cash went from 66 billion or trillion, I can't remember. Anyway, whatever that is, to 62 at the end of 2021, but then we just got the quarterly report that showed us is at whatever it was. Crazy. That's just cash. It's not even receivables. And here's another receivables. I don't like receivables because receivables are receivable until they're not, until a company goes bankrupt. But anyway, and then we got debt right here. Total debt went from 114 to 124. Wow, so I mean, it's a lot of debt, don't get me wrong, but not anywhere near. I mean, look, they got enough cash to pay half the debt right there. And then if we go to total liabilities, current liabilities 125, they got cash at half that. And with their assets are growing through the roof. Well, I guess they haven't, but still. So their cash holdings went down a little bit. Their total debt went from 114 to 124. It's not a huge increase in total debt, even though if you looked at this chart, you think otherwise. Anyway, I just, when you got that kind of cash on hand, man, I'm not worried in the least. Markets go up, markets go down, things change. But remember always, market is very efficient and forward looking. It's actually quite amazing when you think about it. The market is very good at seeing what they expect 3 to 6 months out. Right now, they're expecting 3 months from now to 6 months from now, the economy to be stagnant, if not downright poor. But they're already pricing that in. And I think it's interesting. Anyway, I'll be doggone if I sell anything. What are you going to do? Nah, I'm sitting tight. I believe in dividends. I believe in cash, and companies have both. All right, we'll see you.